Right, so as we can see, this is a recording which is going to be going into the group. But as I've missed the London session, and it's the start of the week, it's Monday, what we're going to do is we're going to go through GU and EU. But what do you do when you're trading the London breakout and London's already been? Well, we revert to the idea of it just being price action. So I'm going to talk through exactly how I would in the group because this is going into the group. They're going to get the unedited version. If there's any swearing, obviously I have to cut it out for YouTube. So that's all bad language in general, or any breaks that I take. So with GU, let's look as we normally do at the start of the week. And this is where we mix up the two strategies together. Okay, so we're looking overall at the FTR strategy, but then we're also looking towards the London breakout, London fake out, and the price action. So it all merges into one, but you link together all the strategies that I teach within my group, and it becomes FTR. Okay, so with the weekly, we ended up on GU anyway, pushing up a little bit, which I wasn't really expecting. I don't really know where price is going to go. There's no imbalance around the place. So there's nothing really that we can run towards apart from we've got on here a swing high and we've got a swing low down here. I imagine this as just some kind of like fat range, and at some point we're going to break out. If you think of what the price is, this is where price matters more than anything when you're looking at the macro environment. And the pound versus the dollar, 1.3 pounds up to about 1.37. Yeah, like you want to try and keep it in that bracket if you're actually running the show. Um, so anyway, daily, we've still got this area up here, which I think I showed in one of the recent videos. And we have this all the way down here. So this is miles away. I'm just going to mark it up, even though I hadn't done before. So I'm just going to put that as a daily POI. And we're currently, if you think of this from a price action perspective, okay, or if you think of it from a retail perspective, we've got essentially, people will see this and say, oh, there's a channel here. And you've got to bear in mind that retailers, banks, etc., everybody's going to see this and everyone's going to have the same conclusion. Everyone's going to think the same sort of thing. What we're doing is we're looking at where is price probably going to react from. It has already reacted from here, which is good, which indicates that the market might come up if it's going to react from a daily zone or a daily level. 1.33 is a pretty, roundish figure. But what we have more than anything, which is really important to sort of measure out, is that we do have an order block down here. Okay, so this is an order block on the daily. And just to talk through that real briefly, we've got the imbalance here. We actually have the sweep. So we have the sweep below this level here. It's an opposite colored candle, which is really good. And we've got the mitigation of this kind of built up condensed area, which means that there were a load of orders in here, which didn't ultimately cause the break above this area, but we did end up pushing higher again, even though it wasn't above here. So we could go either way, but what I would be imagining at this point is we're either going to go up to here and probably work our way down, or we're going to do the opposite and we're going to, just come back down ourselves before we come up to here. I don't know where it's going to go first. We have generally, some statistics to say that we've got, a 2/3 chance that we're going to boss before we chock. And the fact is that we could get involved in an extreme down here or up here. But what's the point in taking a trade which is going to be, 100 pips as a stop loss and feed it to there like everybody else seems to do? That's absolutely fine, but we're very precise with our entries and we'll drop down to the 15-minute or the 5-minute or even the 1 minute sometimes and get a much better entry, with a 5 pip stop. So, we're looking at something like that if it goes well. But the targets remain the same because the higher time frame respects the higher time frame. It doesn't respect the lower time frame. So anyway, I don't have to worry really about boss and shock on the higher time frames, and the reason for that is there's just so much from a macro environment level, and there's so much going on in the world today that we're going to be led by what happens during the news. We're going to be led by what Trump is saying about this, what China's saying about that, what the UK is saying about, and it's just that seems to be varying almost on a daily basis. So we react from the zones. We know where price is going because it's where the liquidity is. The whole market is run based off of sentiment and liquidity. Um, So we're just looking to react when we can react. Now dropping down to the H4, okay, so coming down a time frame, we kind of like just missed up here. And again, a bit like on the, was it on the weekly? We've got a range, so we've got a wick up here, we've got a wick down here. We're kind of sat in the middle. I'm going to get rid of that because that's old markups from last week. I'll get rid of that. Make it a little bit clearer. But where is price likely going to go? Well, we do have an imbalance to fill up here. We've got an imbalance to fill down here. There's been no change really since Wednesday last week, which is technically 5 trading days ago. So we've got to try to make use of something else, on a lower time frame to try and get our entries. And this is where, at the moment, from an FTR perspective, where we would be looking to get involved, within the order blocks and feed it to the next order block, we're sat in between them. So we have to look at other areas of price action. So where are the wicks? Mostly the wicks are on the bottom. That usually indicates that we're rejecting, going down. So price is possibly going to head up. We've had a relatively aggressive, sets of moves down. So we had a strong move down here. Then we had the strong move up, strong move down, strong move up. And we're showing aggression to the upside. We are recovering faster, I think, than what we moved down at, which again could indicate that we have turned. Where we've bounced from was over here, that sort of condensed area, all that curve liquidity after we get past this. We hadn't come down to mitigate this, which I thought we might have done. So really, I'm kind of just guessing at this point. I don't know which way it's going to go. And that's fine as well, because the way that we trade. So I'm going to move to the 15 and see how can we make sense of this. And then we're going to drop it down to the London breakout element. Okay, so with the 15, we've got our H4 zone there. We've got a little H4, which to be honest, I'm not a fan of on the H4. It's just a condensed area and that it's really small. And if I look at the time, so I'm looking down here, this was like midnight Asia session. So there's probably not that much liquidity up there. Okay, so I would expect if we do manage to break this area, which I'm just about to mark up actually as our extreme for this zone where we currently are, if we manage to break this area, I would expect this one to go. It's good to have it on there because on a higher time frame, there's the incentive to wick into it. So break this area and wick into it, and then pull back down. And if that happens, and we get an inverted candlestick coming back in, so I'd be looking for a white candle shaped a bit like this one, actually exactly like that one. If that pushes up and then comes down, goes back in a range, then I will feel that I'm at the extreme of the move, and I could feed it back down to the next zone. Okay, and that's going to give a monstrous risk reward ratio. So that's about it with the 15. I see it as, we're up here, we're down there. This is the kind of range that we're sat in. I don't see anything really that good. So what I'm going to do now is I'm going to drop down to the 5 minute and see, is there anything on like a micro scale where I can say, all right, that's a short-term win. If I say this is kind of probably going to be the area which I want to target initially, because I don't know if it's going up or down at this moment in time. And there's also this as well. That's looking even a little bit better on the 5 minute. So I do think that there's an incentive for price to come up to here. This kind of order block push up got mitigated almost straight away. This then got rebalanced and a bit mitigated, which is good. So I do think that price has the incentive to run through these areas into this and then feed down. So maybe like, a zigzag approach into here, maybe get that wick and close back in and then start to feed it down. I don't know, because we're going to have additional price action by the time we get there. And with that in mind, it's a case of like, well, once it gets there, I can then decide what to do. Am I going to have a situation where we've got like a very strong order block, say like an H4 order block or an M15 or even an M5 around here, and then we get the price action, which I'm saying that I want right now, but there's not a big enough risk reward ratio to take. If that's the case, I won't take the trade. It's always got to make sense from a risk reward ratio. Okay, but if we don't have that and we just got loads of like rebalanced structure, like this, then I'd be quite happy to take the trade because it's worth the risk. So, what I'm going to do now, just for a bit of added guidance, maybe, is I'm going to flick on the indicator for the sessions, okay, and just see where Asia was and see how the sessions had kind of played out today. All right, so we've got the general parameters of Tokyo session, which is, I always say it's like midnight. Technically, it's, 10 p.m. So we literally had it from about here being a low. So I am going to move it to there and just see how price reacted. So the start of the day for us, start of Europe, price worked its way down, and then we broke the low of the open of the week. Okay, so the Sunday night, 10 p.m., and we basically swept it and worked our way back up. We actually had a really nice mitigation, which I missed. I've been in meetings this morning, so I'd missed that, and a bit frustratingly as well, because that's a real nice order block. Just here, not fantastic, but it is really nice. And even if we just took it to the low, like that would be great. But I'd say you want to target an actual order block. Would that have even reached? Just about reached. 13R, missed out on that today. That's fine. But that just kind of shows you, when you know what you're looking for, it's really nice. Or it can be really nice. So New York has only started like maybe an hour ago, not even an hour ago. So we're now looking at, let's get this on here to try to make some sense of it. We've got from here to this green line as the New York session, and it's like, right, okay, what do? We pressed down, pushed up, came down. We have broken that low. We've sort of like rejected that area. Again, I would be looking at this area now. So this zone has kind of broken. It's not a good order block, just for anybody to see. I might put this video out today. I might not even edit it at all. But I would expect this area to go. If this breaks, okay, so this is the order block, in my eyes anyway. This area should break because it's curved liquidity. This has already had liquidity taken from it, and we should be looking to work our way into here. So really, I'm looking for like 2 or 3 things to happen here. I want there to be a reaction off of somewhere here, but this is curved, that's curved. There's kind of nothing around until that's been rebalanced. I want to see an aggressive move. All right, I want to see an aggressive move, so I have the incentive to get involved with an order block, a bit of a safe level, because at the moment there's no real safety here, and I want it to break through here and work its way up. So for the moment, we are playing about within the range of Asia, which is okay. Sometimes it does that. And it's just trying to figure out how you're going to trade it. Now, I could drop down to a lower time frame, which I will do just for the sake of the video. I don't usually take 1-minute trades on GU because the spread can vary quite a lot on the close of the minute, which is a real pain. But the 1-minute is explaining a little bit better. So back to the 5-minute, just show you. I said this looks like an order block to me because the push up and the strong move down. So the outside bar continuing the momentum. On the 1-minute, we can see where that order block has been created. Okay, so right here, we had the attempted push up. Technically, it's from there, but do it from the green. So the push up followed by the strong moves down, imbalance left behind, the sweep, and it's only gone to the imbalance. So this should get run if we go back up, because the moves which go to the imbalance, or the FVGs as some people describe them, they don't usually create the turns in the market. So that should get ran now. But this is nothing but what I class as curved liquidity. I can't see any order blocks in here. Nothing that's unmitigated. Oh, apart from here. Okay, I didn't see that before. So I'm just going to look at that on the 1-minute. And I'll see how that looks in terms of its placement for the 5-minute. Okay, I'm not really worried about these ones coming down. This one maybe. But back to the 5-minute, how does it look? All right, it's kind of in the one possible area where there's an imbalance. Maybe this would require, for me, because it's the 1-minute time frame, we've got 1.3 pips on GU is a bit of a dangerous move. Like, yes, there's 0 spreads at the moment. I use IC markets. Link is below if anyone wants to trade with them. They're pretty good. But I would want to see a reaction candle, maybe even a second reaction candle to show that rejection, because I'm pretty certain price is going to go up past here. And if that happens, let's say that we've got a 2-pip stop. Let's just measure the distance. 26, that's 13R-ish. Okay, so I'd be happy with that. So that's GU pretty much. Okay, so as I'd said before, 15 minutes of explaining kind of like my thought process and my patterns behind it, but sometimes you don't know where price is going to go, and that's absolutely fine. Sometimes you have to wait for the price action to present itself into a sort of like a format where you'd be comfortable to take the trades. So you want it to create the best possible scenario for you. And therefore, you've got to map out what you're doing. I would always explain to people, try and do this analysis at the start of the day and try and do it at the end of the day as well. I don't always do the ones at the end of the day, to be honest with you, but at the start of the day, before you start trading, you're looking at your old markups, clear some of them off, but try to make sense of it so that when price does do what you want it to do and you start to learn your intuition in the market because you see how accurate you are with the scenarios that you're creating, essentially when price comes in, you're not panicked thinking, oh man, okay, I need to think about this, I need to think about this, I need to think about, no, you've already got it planned, you've already mapped out the scenario in your head. You can go ahead and place the order without any panic. And if it's wrong, it's probability. Okay, so it's just the probability is playing out, but you've mapped it out, you're not stressed, you are at peace with the loss. Like if this comes in and it turns out as a loss, I will lose about £200 on the trade. If it wins, I will gain, what, 13 times 200. I'm going to win about 2,600, maybe 2,500 after the comms are taken off. So that's really good for me. Okay, so I am going to do Euro as well because I want everybody to make sense of this. All right, so let me just reset the chart back to there. All right, I'm just going to get rid of the yellow lines because I don't need them. I don't use them. I'm going to get rid of that green thing. So this is now making more sense to me. And I will just draw this back on. And I'm also going to set an alert. So yeah, if there is going to be an edit on this video, it'll be because I've paused it to place the trade. All right. So anyway, over to Euro USD, and I'm going to do exactly the same. And I just asked one of the guys in the group, how many pairs are you trading? Because I was like, oh, you're taking a trade on gold, and you've done one on AU this morning. And he's trading about 5 or 6 pairs, and I just explained to him that's exactly what I used to do. The charts were just, a layer here, so like a split down the middle. So I had multiple pairs, but I was trading the 15-minute. But it was good because then you get the pick of the bunch of what you want to trade and what you don't want to trade. If there's a clean setup, you take that one. If there's a messy looking setup, you can decide which one you're going to do when you've got multiple options. Anyway, weekly with EU, exactly the same as GU really. We've got the wick up, the wick down. This is the range that we're trading in. Drop down to the daily, and again, looks similar. EU and GU are not the same. They do have a lot of similarities, but on a day-to-day basis, they do trade differently. So you have to treat them as individuals. You can find that EU will take off sometimes and GU will stay put. And it's like, I thought these were the same. They're not, they're different, but similar. There are similarities, but treat them separately. Okay, so again, we've got this order block down here, not a fantastic one. These tend to get ran, so they usually, this candle formation was pointed out to me by one of the guys in the group a few months ago, and they do tend to create a change in character or a new boss in the other direction. So this did actually result in the breaking of the high, but when price comes back to them, I do find that they get ran, so something to consider. We have over here, we've got a sweep. I'm just going to check the lows on these. So 421 and 40. So equal lows down here. This is a little bit tricky, especially as we've not broken anything with this yet. But this is an area where there's an imbalance. There's kind of like a sweep and mitigation. I'm not massively keen on the idea of taking a swing trade off of this. But I'll keep it marked up for the moment anyway. But it's certainly looking, in recent price action, bearish to me. Over to the H4, let's see how the charts are marking out. And if you're new to seeing this sort of like format of video from me, the charts are populating because these different lines have different settings on here. So visibility oh, okay, not really that different, but there's different visibility settings. So on different time frames, I'll see different lines on the chart. Okay, so, and it's pre-populated because it's my live chart, which goes into the group. So whenever I do a chart update, screenshot, post it with my thoughts, or do a video like what I'm doing right now. It's recording onto TradingView, and then I can just post it straight into Discord. So anyway, there is an incentive price to get up to here. It's done it twice. But we've absolutely rejected something around here. Like this is telling a bit of a greater story. And I think that this level is going to break. So we should chop down and work our way into, yeah, down here, which I'm surprised I didn't have a alert set. And that's, there we go. H4 is set there. It should be a free fall unless we get a, sort of like a break and then an order block left behind, and then come back to that order block to feed it down to this one, and then possibly break down lower again or push up. Who knows? But I'd be looking to take profits down here if I do manage to get into a short. But at the moment, short looks safest. But we're going to go to a lower time frame and see if there's another direction which we can possibly look at, or just at least a trade to get into. If not, I'm going to go out in the car in a minute. So otherwise I'll stay sat on my chart and just look and watch for an entry. But the beauty of this trading strategy is you can essentially set and forget. So I'm just setting my alerts to say, right, when price comes in, I can then get to my computer and look to trade. I'm going to mark this out, but again, I don't like it. A bit like GU, this is essentially like a curved liquidity area. It's not, this isn't a strong order block, so it's not something that I would set a pending order from. It's the high of Asia. Is it going to get swept? I don't know. I don't really care either. I'm just looking for an entry and I can't find one. So on the 5 minute, again, everything's quite condensed. This hasn't helped the situation. It's not looking superb. I'll come down lower than here, see if there's anything back there to try and get an entry from. Again, maybe here, that did stand out on a 15. And this is looking a little bit cleaner on the 5 minute now. I'm not massively impressed by EU at the moment. I'm not. I'm not in a rush to take a trade. I need to see more price action somewhere. I just need to see like an aggressive move, like a rejection of something, so I can say, "Oh, there's the order block." But at the moment, I can't see anything great. There's one here, but I've got the equal highs up here, which quite often get ran. There was an indicator which shows you where the liquidity is. It's not 100% accurate, but there's very little liquidity at the highs and lows. But the sweep is very helpful. But anyway, I'm going to leave it there. I'm going to obviously post this video into the group in a second to explain like these are my thoughts and what do we do once we get involved. After the London session, so we're getting involved during New York. How do we trade the London breakout when we're doing New York? And it's basically this: you revert to the FTR strategy and you revert to how do we take the entries. And that's the other thing as well. If I just want to get involved in the markets, I will look for now a break below here. I will see how it broke. I'll see how price broke. And whether or not it's a wick break or if it's a body break, I have a different entry technique for both. So let's just say, for argument's sake, we started here and we were looking for that sort of entry technique. We got the body break below here, not quite the wick break there. We got the body break. That means that we revert back to an order block or the end of an imbalance. So you'd either set a pending order there, or you'd set a pending order here at that point, or one over there. And you'd quite happily take a short from here and try to feed it down until we get taken out of the market. So at the moment, we would have a full risk position on here. You could set a stop, like a safety stop just behind there, which would make a little bit of sense. But you would, if you'd have taken the trade out of here based on the price action, this would have been your entry, and you'd just be looking until price takes you out. So at the moment, that might be the only thing that I can do with EU, because there are no solid areas for me to get into the market. So I might just have to trade price action. And at the moment, price action looks like it's probably the best. It would be difficult just sort of like sitting on your hands because it's very up and down, up and down, up and down. So you'll be in profit and then less profit, and then in profit and then less profit. But sometimes when the market's condensing like that, that's the only thing that you can do to be involved. But I'm going to go out in the car in about 20 minutes. What's that? GU. All right. Bit of live price action. Let's see how this goes. All right. So let's jump to what I was hoping that it would do. We wanted a rejection candle off of here. Oh, we got a strong body break. We've rejected the bounce back out. let's just see how this works out. I'll keep this running. I'll pause the video, but we'll see what happens here. All right, I'll turn off my camera as well so I can do something else. Um, but we'll just see if this plays out, then there's no entry taken. All right, so. Okay, so I'm just going to come back into this and say that we have now, closed outside this area. So this is now, as far as I'm concerned, invalid. There will be no trades taken from this, but I do want to see how we've broken it. All right, so I'm just going to sort of analyze this a little bit real quickly before we close this video off. We broke it with a wick. All right, so if I wanted to get involved with this trade, we do have an entry technique, which means that we would be currently in the trade, and I'd be like not encouraged at the moment. I'd have been encouraged halfway through this candle, but right now I'd be panicking a little bit. But long story short, stop loss would be somewhere up here. But we have rejected there, we've rejected here. It should continue down. Okay, so my trade would have looked something like this. Okay, so it would have looked something like that. There'd be a 3-pip stop. Or 3.5 pips, just to make sense, because it's GU. So for safety, just add a little bit. But I would be looking to take the profit. No, got to be a minimum of 1 to 4, so it can't be there. I would probably be managing this trade, to be fair. I'd be glued to my seat for the next probably couple of hours at least, just managing the trade. And if there's an opportunity to scale in, I would, and I try and do that. But essentially, I'd be looking to take the trade short. So you don't have to stick to the solid rules of FTR where it's waiting for price to get into the zones of liquidity. You can trade the actual price action. And when you trade the actual price action, oh, there we go, it's now going. But, oh, and there's another entry which could be available here, which I will set. But there's an order block being left behind. So if this closes strong, just like this, without a big wick, but if this closes strong, there's an order block here to get short. It'll be interesting to just see how this plays out. So again, I'll try to, I'll tell you what, let's just put this on. And again, I'll just leave the video running and we'll see if it enters. But this would be your scaling already. Okay, so you'd be scaling into a second position. You'd be in the first position from there. So you'd be in one trade and you'd be risking, at most maybe 1.5R, which is absolutely fine. I say that you can risk up to 3 or 4R at the same time, which is what I do sometimes. But 1.5R is a bit of a safety barrier. But if we can, we'll get into a trade here, which I'm going to have to do now. So I'm going to jump out and I'll leave it running. Right, so as we can see, I just left it running. Hopefully I'll speed up the video, but price is now running at, actually the stop loss isn't that clean, it is there. So 2.5 are within, what, 10 minutes of seeing the trade, something like that. And we'll just continue to take trades like this. At the moment, there's this area, not really an order block. And there's this, again, not really an order block, but no. But yeah, you'd be in 2 trades, and you'd be 2% on one trade. Next trade is 2.5%. That's 4.5%. It's been about, how many candles is this? 12. So 12 minutes, 4.5%. And that's what you do. So if you are not in a current zone in FTR, oh, look at that retracement. But if you can't find a setup on the FTR rules, you just revert down to the price action. This is taken on the 1 minute. I don't typically trade GU on 1 minute anymore, but that's how you do it. So if this has been helpful to you and you want to essentially, join us in FTR, it's an application process. I don't invite everybody, so please don't be offended if you don't get an invite. It's based really on your responses on the application form. It's short and quick. But you do get a PDF download of one of the entry techniques, which I love. It's my favorite one. So, you'll have that as a thank you anyway. But yeah, join us if you want. And just so you know, there are multiple guys in the group who do trade for a living, and they use my entry techniques and my strategies and yeah, make a living from it, as do I. So hopefully it's been useful. Bit of a different one again. If you do like these video formats, I'm quite happy to share them and do them a little bit more often. But I tend to do these more or less daily in the group. As soon as we've got a big update in the charts, I'm usually jumping on and sharing it into the group. So anyway, let me know your thoughts, and yeah, catch you in the next one.